Hello and welcome back to today's episode of Oh My God. I'm just going to cover a little bit of the look at Bitcoin at the moment. There is such an interesting accumulation consolidation event happening. Let's get right into it. So as noted by DannyD21M, there is this massive shift occurring right now in the hands and the changing of hands that Bitcoin is undergoing. He writes, this is the saddest stat in Bitcoin, which is that businesses, funds and ETFs, others, governments, they're all accumulating Bitcoin. Meanwhile, where are those coming from, right? Every Bitcoin gets mined, so they have to buy them off somebody. It's not as though they can go to the great Bitcoin repo in the sky. Without a miner, you cannot get Bitcoin, plain and simple. So the reality is that individuals have been selling these assets, and we are watching this massive accumulation by quote unquote the powers that be. You could look at this as sad. I mean, to some degree, if you're holding a couple Bitcoin, this could also indicate that maybe we are on the path to, say, $1 million. But at the end of the day, it appears as though Bitcoin will become out of reach for the average person. And this is not just due to price, just simply because the overall purchasing power puts them in such a small camp. Of course, this will move the price. Both of those things really do go hand in hand, but it is an interesting position to look at. And when we go to core Bitcoiners like Jack Mallers of Strike, of 21, the company that is now set up to accumulate Bitcoin in sort of a strategy kind of way, he talks about Bitcoin lending. And this is an interesting idea for anybody that is a person that wants to hold their Bitcoin and maybe have access to capital. In this regard, let's say Bitcoin's at 100K, you could probably take out, I don't know, a 2-to-1 loan, something like that. So you could pull $50,000 in cash out of that to be repaid over time. If you want money now and you want to hold those Bitcoins, this is an interesting concept. But if nobody has those Bitcoins, I mean, who's going to be doing the lendings? We'll probably be looking at Bitcoin becoming this consolidated asset. While he goes on to say that Strike does not rehypothecate your Bitcoin, minimizing the risk, we have to assume that someone in here, these businesses, these funds, they are going to be rehypothecating, right? They're accumulating and they may become the primary consumer of this Strike lending application. So who knows? Basically, all this is to say is once those Bitcoins go into this business coffer, this treasury, they may never come out. If they can provide liquidity, if they can provide access to cash, then why would they ever sell them, right? And of course, we see that the same thing, 21 Capital, also by Jack Mallers, the gentleman that I just showed, they just bought $450 million worth of Bitcoin. Now, this is a partnership with Tether and Cantor Fitzgerald. So this is a powerful trio that is dead set on accumulating and aggressively pursuing a Bitcoin treasury. Now, again, we can look at this in a variety of ways. If you're an early Bitcoin holder, this could provide a tremendous exit. If you're looking at creating and establishing a new global order around the monetary system, well, maybe this is actually destructive. And that could put you back into Ethereum's camp saying, hey, Ethereum looked at Bitcoin and said, it's not really great tech, right? For a distributed system, it only has one application, which is the moneyness of the Bitcoin asset on the Bitcoin blockchain. Ethereum itself is a world computer with a deflationary currency, and as they like to say, ETH is money. I personally hate that tagline. I just think it doesn't ring. I get what they're saying, that if ETH is something that you spend, that you actually utilize, then Ethereum would take over the world. However, people went for faster, cheaper, easier with Solana, which is arguably less decentralized. So maybe that moneyness that Bitcoin so aggressively sought after is lost somewhere in the sauce. It's very hard to say. And of course, we see something interesting when we do pull up the markets, and this is probably true for the first time in a long time, which is when we look at 24-hour volume. Ethereum is overtaking Bitcoin. We've been in a Bitcoin market for a very long time. Now, generally speaking, we get some sort of altcoin season when the Bitcoin dominance begins to wane. I showed it before. It had a crack in its up and to the right trajectory. The Bitcoin dominance is starting to level out. There is a lot of excitement around Bitcoin at the moment, but we're probably in a consolidation phase. It's had a great run, and the market generally likes to see some sort of flat movement after a huge run. It doesn't look like we're in sell territory, so I'm not expecting a major pullback, but an alt market generally does happen when Bitcoin again goes up and then ebbs and flows, and that current goes into other assets. Now, of course, we have infinitely more assets than we did in the previous cycles. So do these things remain true? Hard to tell. Probably, yeah, for other blue chips like Ethereum. I'm sad to say XRP is a blue chip, but on the monetary side, I guess it is, or on the value side. Tether, BNB, Solana, right? And of course, when we look at 24-hour volume on Solana, significantly less than Ethereum. So you can see the maturity of this ecosystem. However, who knows if we're going to get the same sort of impact? There's so many coins on Pump.Fun, right? The meme coin explosion has gotten to the point where people don't even know which coin's the real one. There's so many. It's become like a spam, an overwhelming amount of assets. So that almost leads me to think that we're in this race to zero on the idea of alternative assets, and that we will actually return to the fundamentals at some point. In a world of infinite garbage, we will seek out quality, and there are very few but very high quality blockchains out there that do decentralize their work, that do reward the participants well, that actually have a relevant thesis for what the product market fit is and where the asset fits in that whole flow. This is something that I greatly look forward to. I got into this space to invest in things that you could go to sleep at night. They used to say hold on for dear life, but also like hold the asset. Whereas the meme coin motion really got us into the pump and dump mechanics. It was philosophically depressing, and I do think that there will be this return to fundamentals. It's just, how else can you suss this out in a world of noise, signal to noise ratio? So that being said, market's looking great. There's some interesting conversations that I'm tracking. I'll keep poking around to keep you up to speed. And I hope, as always, that you stay safe, and I will see you tomorrow. Thanks for tuning in.